Hey guys, Bill Soriano here from Pittsburgh, and I wanted to do a quick video here tonight to post in the group, my Forex Smart Money Trading Academy group here on Facebook, right? So I also posted in some other groups as well and share it all across all my social media. So trying to get some likes here on YouTube. So if you're watching this video, you get value from it. Make sure you subscribe, like, and comment. I really appreciate if you would do that. So I was doing live Facebook Live videos in the group here, but what happened was I noticed that they just weren't getting a lot of reach. So actually, no video posts get a lot of reach in my group, but by doing it on YouTube, I have a chance to reach more people by posting them on YouTube, and then I can just share them in the group. So it's no big deal. So anyway, tonight we're going to go over some of the trade alerts that came out this week. As you know, over the weekend, we go through the all 28 Forex pairs in my watch list on TradingView. We look at the daily trend. We identify a 4-hour order block going with that daily trend. We get a point of interest inside of that 4-hour order block, and that's where we set our alert. And once price hits that alert, right, we get an email from TradingView telling us our alert was hit. We also can get a text message if we want to. And then what we do is we come to the chart and we drop down to the 15-minute time frame in order to look for our entry model, which right now we're utilizing the lower time frame flip entry model that involves a choke or a change of character and a break of structure before then identifying our order block on the 15-minute chart, where we can set our limit order to get into the trade. So we could set the limit order, we can go to bed, go to work, do whatever we got to do. And if price hits that, we'll get into the trade. And we'll also be able to set our stop loss and take profit at the same time. So let's go through the list here from the top here. And so the pairs that have alerts that have gone off have these different colored flags by them. So all these pairs without a colored flag by them, the alerts haven't gone off yet, or they've gone off and they're just not significant. So the first one we have here is OddCAD. And what we could see here is we had this first order block here marked up on, and that's this till area right here. And as we can see on the 15-minute chart, price just kind of moved right through there. And so we also see that we have these 4-hour candles going right through the order block and closing outside of it. So that invalidates the order block. Okay, so then what we do is we go back to the daily chart. We make sure that the trend bias hasn't changed yet. And if not, then we look for another order block higher up in this case, right? And so we did find another order block. If we go to the 4-hour chart here, we found another order block here over here. And so we set a new alert there, and price did not hit that alert yet. So that's the blue line, okay? So when you're on my charts here, this teal line, this teal area here is the order block, and the blue line is the point of interest. And that's simply the open of the institutional candle that we're using to identify the order block, right? So that's OddCAD, nothing happening there. The other one here is AUD JPY. So this came down here, and this actually does hit the point of interest. It looks like it doesn't here, but it actually does hit the point of interest. So at this point here, we don't really get a valid break of structure to the downside. So we're still looking at the choke or the change of character to occur all the way up here. So we need to see price break structure up here, create a choke or a change of character telling us, hey, the market is now ready to move in the direction we want to take it. So at that point, once that happens there, we're able to identify our order block here on the 15-minute chart, which would be this red candle right here, the last down candle before the up candle. So we would put our limit order right there, but price never came back. So price never came back, and it just took off to the upside before it came back. Okay, so that's what happened. That's what happened here with AUDJPY. CADJPY. Okay, so this is a situation here where, again, we hit our point of interest here. We got our choke right here, or our change of character, And so right now, we're just waiting for price to come back here to this order block right here. So we can actually set a limit order right now since price is starting to move back down. Once I get off this video, I'll probably set a limit order, a buy limit right here. And that would be at the open of that last down candle before the up move. So it would be right around that 104.958 area, right? So I'd probably set a buy limit there, right? So if we got in right there, right, our stop loss would go at the bottom of that wick there, plus whatever the 14-period ATR is. And if you look down the bottom left-hand corner of my screen, you could see the ATR. And at this point here, it's about 7 pips. So we always pad our stop loss with 1 times the 14-period ATR, which is on the 15-minute chart here. And so right now would be at a 20 pip stop. So if we add 7 onto that, we would risk 27 pips on this trade. That would be our risk. Of course, the amount that we risk is always the same because we just adjust our lot size, right? And then we're always going for 1 to 2 risk to reward ratio trades. That's what this strategy is calling for right now, and that's what I'm teaching right now. And so the idea is you're getting a 2% gain on your wins, and you're losing 1% on your losses. So actually, you can lose 2 out of 3 trades and break even. Okay, that's why you need to have at least a 1 to 2 risk to reward ratio on your trades, okay? Because that allows you to lose. You could actually lose 2 out of 3 trades. Not that we want to do that or that we are doing that. And I'll show you, next week, I'll probably show you the spreadsheet with all the trades from last week and this week in it. Over the weekend, probably when we go over the outlook, I'll probably show you that. I don't want to go over that right now. But we're winning way more than 33% of our trades. So we could actually win just 33% of our trades, or 1 out of 3, and break even with this, with the way you're doing it. So we're risking 27 to get about 54 here, okay? So price needs to come down here a little bit further to get us into that trade. EUR AUD is the next one here, okay? So you see here how price came down here on the 15-minute chart, closed outside of our order block. You want to go up to the 4-hour and see if the 4-hour candle closed outside of the order block. And you can see that the 4-hour candle did not, right? The wick obviously came down there, but it respected this order block. So this is still a valid order block to to trade from. Okay, we got a nice shift candle right here, which is just an extra confirmation for us. The price, may start to move in our direction, but it's not enough for us to set a limit order. We need to get a choke up here. We need to see price move up past here, break structure up here, and then, or at least right here. And it hasn't done that. So we like to use the wicks to define the area where the break of structure needs to occur. And then we want the bodies of the candle to close above or below that area, depending on if it's a buy or sell. So that hasn't happened yet. So until we get this change of character, then we can't set our limit order down here because price isn't showing us that it's ready to move up yet. It hasn't given us enough proof yet, so to speak. GBP AUD is another one here. Again, price comes down, hits our point of interest, and it just, before it breaks structure here, gives us a choke, it goes lower. See? So now our choke is right here where this red line is. So again, we need price to move up past here, give us our change of character or choke. Then it needs to come back down to our order block here, get us into the trade, and then hopefully price continues upward after that. And seem to have some difficulty here with the power. So hopefully it stays on here, or else I'm going to lose. Every time I try to do a video, something happens. Either I mess up on TradingView or the power goes out. So let's see here. Let me just pause. Okay, guys, it seems like I'm back here. was going over GBP AUD and looking how we're looking for a choke or a change of character here with a break of structure, and then a move back down to our 15-minute order block down here, which would be this last down candle right here before this up move. And again, just like when we're identifying our order blocks on the 4-hour chart, order blocks should always cause a break of structure. There should be an engulfing candle, either the next candle or within the next couple candles, right? And it needs to create imbalance. So you can see here, this red candle right here, this last down candle before the up move, that will eventually break structure if that happens, right? Now, it is possible that a different candle could we could have an order block up here too as well. If we get a nice break of structure to the upside, our order block might be this red candle right here. But right now, we would look for price to come down to this area right here, okay? So keep that in mind there, right? Let's go to GBP CHF. So this is a trade. This is a current trade right now. Okay, so this basically we had two order blocks that got combined together here. Price moved down. It hit the first order block, went through it, and then we identified a second order block right below it, which is why this area is so big here, right? And then what happened was we got a change of character right here on this candle right here. This nice big blue candle here on the 15-minute chart broke structure to the upside, gave us our change of character. And so that identified this area right here for our entry. Okay, that was our order block on the 15-minute. Again, we have a nice engulfing candle after it. It does have some imbalance down here. It didn't come down and fill it. But so you would get in this trade right here, basically at 10:15 a.m. today. So that's when this trade would have executed for you. Okay, if you just kind of slide that over there. Right there on that wick, and price is currently moving up again. We're risking 30 pips to get 60. So our stop loss, right, we put it at the bottom of this wick here. And then we padded it with 1 times our 14-period ATR. And that took us down. That gave us another 10 pips for a total of 30 pips stop loss, trying to get 60 pips profit to the upside. Okay, so that's GBP CHF. So that is a trade that we will track to see if it wins or loses. The next one is NZD CAD, JPY. I'm sorry, NZD JPY. This is another trade here. You can see how price comes up, closes outside of our order block. But if we look on the 4-hour chart, it doesn't really close outside, right? So it still respects the order block. It's still a valid order block to trade from. We get a just barely a break of structure or a choke right here. And then price comes back basically to this order block right here. And we did have a nice shift candle, this yellow candle, giving us another confirmation that this was going to be going down. Okay, you see you have several down shift candles here. Those are the yellow shift candles with the red lines above them. And so right now, price is in profit. Again, this is just risking 17 pips to try to get 34. So, you know, the less pips you could risk, it's always better, because then it's easier to get the 2 times your risk to get out of the trade, right? So that's NZD JPY. So right now we have 2 trades that are current. Right here, we would have got in this trade. Let me see here. We got the change of character there. Price came back, and probably right here at 2:30 p.m. You know, you may have gotten in right here at 1:30, anywhere from 1:30 to 2:30 p.m. You might have gotten in that trade. Now, because of that, if you didn't have a limit order set, you know, you may not have even taken this trade because of the time of day when the entry was hit. Okay, but we do have 2 trades that are current right now that we have on our spreadsheet to determine whether or not they win or lose. And let's see. Hey, here's the spreadsheet right here. So this is what we have for the last 2 weeks. And you can see here, our last 3 trades did lose. So you can see we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 wins. And right now, just 6 losses. So remember, with this strategy, risking 1% to get 2%, right? You only need to win 1 out of 3 trades to break even, right? So right now we have a very good winning percentage, but we did lose the last 3 trades that we took. We would have lost those last 3 trades. Now just imagine if those losses would have happened up here and you would have got a string of 4 losses in a row. Then you would say, oh my God, this strategy doesn't work, right? You can't do it like that, guys. You have to take at least 50 trades. You know, at least a 25 trade block. I'm going for a 50 trade block on this. Okay, so you need to take at least 50 trades to see if the strategy works or not. Then when you see it works, you know that you can take your trades and you don't have to feel like, oh my God, what's going to happen here? Now, again, we were getting out at 2 times the risk, right? Now, but I did keep track here just to see if any of these trades would have went further. This one could have got to 5R, this one 3R, this one 3R, this one 4R. But all the rest only got to 2R, and then most of them turned around and would have gotten stopped out if you tried to get like a 3R trade. So that's why we get out at 2 times the risk. We're out of the trade, the whole thing, the whole thing. There's no closing half the position and moving the stop loss to break even, because most time, guys, when your pair makes a 2R move in your direction, it usually comes back down to where you got in before it moves up further. So you would just get stopped out at break even and you wouldn't be getting all your money. Okay, and again, we're using for our stop loss that wick, and we're padding it with 1 times the 14-period ATR. Now, what if we didn't pad it? You know, what if we just used the wick plus 2 pips like most people do? Well, 4 of these winning trades would have been losing trades instead. Okay, so again, we're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Right now, we're 13 and 6. We would have been 9 and 9, right? Had we not padded our stop loss. Okay, and there's only 1 trade that would have gotten to a 2R and would have won had we not padded our stop loss, but it ended up losing. So these 4 here outweigh that 1. Anyway, let me get back to the charts here. So this is a trade right now, NZDJPY. So NZDUSD, this one it just kept moving up. So there was a trade. This is one of our losing trades this week where we took this trade, obviously got stopped out. Then price did move down, and it would have given us our 2R gain here, but we got stopped out prior to that. And then it just made a big move to the upside. And guys, it blew through 1, 2, 3 order blocks. And now you see how I have checked the trend bias here, because now it looks like the trend is starting to change. So we're not even going to look at this pair anymore this week. It's Thursday night anyway. So we'll reevaluate all pairs over the weekend, and I'll do that, 45-minute video where I go through all the pairs and we identify the daily trend, the 4-hour order block, and 4-hour point of interest. But that's where we sit so far here on Thursday, 7/13. That's where we're at. Like I said, we have these 2 trades right here in NZDJPY and GBPCHF that are currently running. And so we have to see what happens right there. But for the last 2 weeks here, we're 13 wins and 6 losses. Okay, so that's a pretty good winning percentage. And again, we're winning 2% on our winning trades, which would be 26%, 13 times 2. And on our 6 losing trades, we would lose 6%. So we'd be up 20% right now, right? Because we have 13 winning trades and only 6 losses. So again, 2% times 13 winning trades is 26%, minus the 6 losses times 1% or 6, and you're up 20% so far for the last 2 weeks here. So basically for the month. This is for the month of July. So we kind of do our test each month. We want to see how many trades we're getting on average throughout the month using this smart money concepts, right? And again, we're trading all 28 pairs, right? So that's what we got, guys. Now, remember, if you got some value from this video, if you're on YouTube here, or if you get to YouTube, you watch it somewhere else, but you pull up YouTube, whatever, please, guys, please, subscribe to my channel, give me a like, drop a comment below if you got some value. And if you need to get your free 9-part Smart Money Concepts video series from me, drop me a message here. My contact information below this video. Send me a message. I'll send you a link to register for your free 9-part Smart Money Concepts video series, right? And if you're ready to join our community, get access to everything we have, in our community and in the company that we're with, all the live training, tons of educators doing live sessions every day, Monday through Friday. Drop me a link, drop me a message. I'll send you a link to that. And right now, during the month of July, you can save $85, okay? Save $85 during the month of July. And as always, you get the company's 7-day money-back guarantee. If you try it out for 7 days, you don't like what you're seeing, you get with the company and they give you your money back as long as you're within that 7-day window. Okay, guys, remember, subscribe, like, comment on this video, and I'll see you guys probably this weekend, either Saturday or Sunday. I'll drop a video when I go over the weekly outlook for next week. Have a great night. Have a great weekend coming up.